What exactly is a stock market? The phrase stock market describes a number of marketplaces where shares of publicly traded companies can be purchased and sold. Such financial transactions take place on official exchanges and in over-the-counter markets, OTC, that adhere to a predetermined set of rules. The terms stock exchange and stock market are frequently used interchangeably. On one or more of the stock exchanges that make up the broader stock market, traders purchase and sell shares of stock. The New York Stock Exchange, NYSE, and the Nasdaq are two of the most significant U.S. stock exchanges. Stock markets serve as meeting places for buyers and sellers to trade equity shares of publicly traded companies. Stock markets are essential elements of a free market economy because they make it possible for anyone to trade stocks and exchange money. The efficient price discovery and trading that stock markets produce. The Securities and Exchange Commission, SEC, and regional regulatory agencies oversee the American stock market. The stock market. An overview. Buyers and sellers of securities can connect, communicate, and conduct business on the stock market. In addition to serving as a gauge for the general economy, the markets enable price discovery for corporate share prices. As players in the open market compete for business, buyers and sellers may be guaranteed that they will receive a fair price, a high level of liquidity, and transparency. The London Stock Exchange was the first stock exchange, and it got its start in a cafe where traders gathered to trade shares in 1773. Philadelphia hosted the country's first stock exchange in 1790. The Buttonwood Agreement, which gave its name after the buttonwood tree under which it was signed, opened New York's Wall Street in 1792. The document, which was signed by 24 merchants, established the first securities trading association in the United States. In 1817, the traders changed the name of their company to the New York Stock and Exchange Board. A stock market is a managed and regulated setting. The Securities and Exchange Commission, SEC, and Financial Industry Regulatory Authority, FINRA, are the two primary regulators in the United States. Early stock exchanges issued and transacted with tangible share certificates made of paper. Today's stock exchanges run entirely online. Despite being referred to as a stock market, it also deals in other assets, such as exchange-traded funds, ETF. How the stock market operates. Stock markets offer a safe and regulated setting where market players can confidently engage in shares and other permissible financial instruments with little to no operational risk. The stock markets function as primary markets and secondary markets, adhering to the regulations set forth by the regulator. The stock market, which serves as a main market, enables businesses to issue and sell their shares to the public for the first time through the process of an IPO. This practice assists businesses in obtaining the funding they require from investors. When a firm divides itself into shares, it sells some of those shares to the general public for a set price per share. The stock market provides the marketplace that is necessary for a corporation to facilitate this process of selling these shares. A listed firm may later conduct other offers, such as follow-on offerings or rights issues, in order to issue new, extra shares. They might even repurchase or delist their shares. Investors will purchase stock in a company with the hope that it will increase in value, pay dividends, or both. This capital raising process is facilitated by the stock exchange, which is paid for its services by the company and its financial backers. Investors can also acquire and sell securities they already hold on the secondary market via stock exchanges. The S&P, Standard & Poor's 500 Index and the Nasdaq 100 Index are two market-level and sector-specific indicators that the stock market or exchange maintains and which serve as a gauge for tracking the movement of the whole market. The stock exchange functions as a trading venue for the outstanding shares after an IPO to facilitate buying and selling. This is what the secondary market consists of. During secondary market activity, the stock exchange receives a commission for each deal that takes place on its platform. What purposes does a stock market serve? Price transparency, liquidity, price discovery, and fair dealings in trading operations are all guaranteed by the stock market. The stock market ensures that all interested market players have access to information regarding all purchase and sell orders, aiding in the fair and open pricing of stocks. The market also makes sure that the right purchase and sell orders are efficiently matched. Stock markets must encourage price discovery, in which all of a stock's buyers and sellers work together to decide the price. Order placement should be immediate for those who are competent and eager to trade, and the market should make sure that orders are filled at a reasonable price. Market makers, investors, traders, speculators, and hedgers are only a few types of stock market participants. While a trader might enter and exit a position in a matter of seconds, an investor can acquire stocks with the intention of holding them for a long time. A market maker provides the market with the liquidity it needs, whereas a hedger can engage in derivatives trading. Regulation of stock markets. A local financial regulator, monetary authority, or other institution regulates each stock market in every country that has one. The regulatory organization in charge of regulating the American stock market is known as the SEC. As a federal organization, the SEC operates free from political interference and the influence of the executive branch. Protecting investors, ensuring fair, orderly, and efficient markets, and enabling capital formation are the stated goals of the SEC. Companies that are listed on stock exchanges are subject to regulation, and the SEC keeps an eye on their business dealings. In order to guarantee that all market participants are similarly informed, the exchanges also set certain rules, such as regulating the timely submission of quarterly financial reports and prompt reporting of pertinent company happenings. Trade suspension and other disciplinary actions may result from breaking the rules. What is the stock market's importance? A free market economy includes the stock market as one of its elements. It enables businesses to raise funds by selling stock shares and corporate bonds, and it gives investors a chance to profit from the business's financial success through capital gains and dividend payments. The stock market serves as a platform for directing individual investors' savings and investments into profitable business ventures, which helps the nation's capital formation and economic expansion. An alternative trading system is what? Alternative trading platforms, which are not regulated like exchanges, are places where massive buy and sell transactions can be matched. Dark pools, which operate within private organizations, and many cryptocurrency exchanges or private exchanges or forums for trading stocks and currencies. Who aids an investor in stock market trading? By purchasing and selling stocks, stockbrokers operate as go-betweens for investors and stock exchanges, and portfolio managers are experts who manage client portfolios or collections of assets for investment. Investment bankers serve businesses in a variety of capacities, such as those engaged in upcoming mergers and acquisitions or private businesses seeking to go public through an IPO. Thank you for watching this video. In the next video, we will discuss more on financial topics. Don't forget to subscribe and hit the like button and leave a comment.